We have the rand trading around R7.7 against the dollar, so remaining around those weaker levels it's hit this week. We've got the euro just crossing below 133 against the dollar, so lots of pressure on that euro as well.
That's it. It's good afternoon, Stephen. More a case at the moment of a weak euro, if anything, influencing the rand activity. Certainly real concerns once again over Spain and Portugal in that PIGS group, with Ireland receiving a bailout following on from Greece. The concerns are now rising, and it's certainly coming through and being evident in the strength of the euro. Euro just above its lows of yesterday, and that's leading to a weaker rand that we're seeing up now at that 707 point.
Well, given the weakness that we have seen in the euro, are you surprised that the rand hasn't weakened more against the dollar?
Yeah, that's a good point. We have, however, seen quite a fair amount of exported dollars at between the sort of up at the 710 level. So at the moment there still seems to be quite a lot of dollar selling activity, which is supporting the rand for the moment, sure.
And of course, you mentioned some of the problems with Spain and Portugal perhaps having to get bailout packages as well. Of course, earlier this week, it was really the Korean peninsula that put pressure on the markets. That seems to have faded into the background for the moment, but it still is there, isn't it?
Yeah, I think it'll still be on the radar screen. That is obviously a big concern, and markets definitely reacting to that. But it seems, fortunately, that there's been no real follow through. So yeah, as we can see, sort of markets taking a more positive turn at the moment, but yeah, keeping an eye out for any developments there for sure.
Well, James, of course, the US market's closed today for that Thanksgiving holiday. Tomorrow, a half day's trade. So would you expect things to really wind down from now to the weekend?
Yeah, you'd think so. Certainly some illiquid situation in the currency markets, but definitely Thanksgiving typically is a pretty quiet weekend with a long weekend. So yeah, I wouldn't expect too much activity going forward from now, no.
We had some CPI data out yesterday, coming a little bit higher than expected, but then you have to look at some PPI numbers out this afternoon that were a little bit lower than expected.
That's it, yeah. No real surprises in both cases. CPI marginally higher. I don't think that's a big concern there. The attributing factor to a large portion of that being the month-on-month increase at around 0.2%. Half of that was as a result of carbon emission controls being put on new vehicle prices, bringing those up. So still no real pressure there at the moment on the consumer price inflation. And as you say, PPI coming in slightly lower than expected. That's pretty much as a result of a seasonal adjustment to the electricity price being in September that it comes down. So yeah, still with the strong effects of the rand showing through also on those producer prices. I think in both cases it's really going to be down to the rand's performance, if anything, that will affect it going forward.
Well, how has the bond market, how have yields reacted to some of the economic data we've seen this week?
Well, yeah, with the CPI not really surprising to the lower side, and probably more a case of general risk aversion. We've seen our local bonds sell off around sort of 20 basis points, and it probably more, just a reason of a little bit of de-risking, a bit of profit taking, probably, as we've seen general sort of bond markets have a sort of sell-off as the position on the European debt front comes into the picture. So yeah, on the yield side and the short end as well, we've seen the franc sort of move up, and that's equating to sort of a lesser discounting of interest rate cuts going forward.
How about steady interest rates, though? What's the market telling us about when we're going to see the next interest rate increase at this stage?
Well, yeah, firstly on the decrease side, as I say, it's sort of only really pricing in a 20% chance of a cut. So that's probably pretty accurate and in line with our expectations that rates will probably be flat to anything. But going out, when will we expect an increase? Well, at the moment, I think it'll be flat for next year, and any increase I think we could only really expect in 2012 for now.
James, we had a whole host of US data out yesterday, and it appears to be pretty mixed, although the market did respond positively to the numbers, particularly the jobless numbers. But we had durable goods orders coming in weaker than expected. We had new home sales falling 8%, so a real mixed bag over there.
That's right. Markets, yeah, they've looked at it favorably. Obviously, the employment figure was the big sort of supportive number. But as you say, new house sales down 28% year on year, still showing that the consumer at this point is struggling and not recovering. But it's a mixed bag and seems to be taken positively at the moment.
James, the rand from these levels, where would you expect it to go? And of course, I mean, there has been some talk that we could see a strengthening rand going forward. What would the catalyst be for the rand to move stronger from these levels?
Now, the rand moving stronger would still be as a result of excess liquidity in the system, trying to find higher yields, which, generally has been the trend. A little bit of a move to the negative at the moment, but generally you should expect that we're still offering some good yields here at the moment, and I think that would probably be it. So maybe a little bit more foreign buying into the market, or as we move forward, any sort of lower move on the inflation front. So I think that would be the rand story for now, and it seems to be a fairly narrow range going forward, just around this sort of 7 rand level for now.
Would you see this week's weakness though as a temporary move really for the currency?
Yeah, I think so. But seeing that it's based on the euro, the euro certainly at the moment looks like it's in for some sustained weakness. So that will still contribute probably negatively to the rand. So it just depends on those exporters and how much sort of support the rand gets from that. And if it at any point dries up, then perhaps there is chance for a weaker rand move.